The fallout from SVB is still rocking the markets. We're going to talk about that on Today in Mortgage. Hey, what's going on, Dreammakers? I'm back here, and today I've got a special guest named Hugh Hartzog. He's part of one of our branches here in Houston, Texas, called Bunk and Baker Mortgages. And Hugh is new to the industry, but he has been around finance for a long time. So, Hugh, why don't you introduce yourself real fast and tell us where you're coming from?
Hugh Hartzog here. I joined Bunk and Baker Mortgage Group last year. Prior to that, I was a consultant and an economic researcher with a consulting company here in Houston. I have a master's degree in finance, and my bachelor's is also in finance.
Hugh's been doing some breakdowns of economics and the factors that play into our economy in the mortgage industry on his show, which is called Hugh Knows, which is on the Bunk and Baker channel, and we'll link to that below in the show notes. On a recent episode that they had, they talked a little bit about what's still happening with the fallout from SVB and how it has actually improved the outlook for the future a little bit. So, Hugh, you guys talked about this on your show, but I'm asking kind of the same questions. We'll put this graph up on, but you made this chart that shows kind of the before, the after, and the during of the expectations of our rate economy as we move forward. Is that right?
Yeah, so what we can see on display right now is the market expectations of what the Fed is going to do. And this comes from the Chicago Mercantile Exchange, and they have a tool which assesses the probability, what the market expects the Fed to do over the next several months. And so on display, you can see that red line. What that red line shows is basically what the market was expecting prior to SVB collapsing, prior to the other bank collapsing, prior to Credit Suisse having
That's
that
like
issues.
The baseline.
That was the baseline before risk came about. And then the yellow line on display, which is the lowest line, that's basically the market expectations right after all of the collapses happened, the issues with Credit Suisse. And so basically the market was saying, there's some increased risks here, so now we're expecting the Fed to be less hawkish on interest rate policy and possibly even start to decrease interest rates over the next few months. So that's the yellow line, and so that was the expectations about a week ago. And now you can see the blue line, which is the expectations now. It's a little bit higher, where the market is saying, hey, we really didn't see a systemic spreading of that bank crises. You know, it looks like that those have been addressed. And so now the market has pivoted back to focusing on inflation and what the Fed is trying to do to address inflation. So initially, before SVB, the market was assessing that rates would be relatively higher. Right after SVB, a lot lower. Now we're sort of in the middle because, again, even though you don't have the financial risks, they're still in the background, but more of the focus is on inflation.
Things have moderated a bit, right?
Yep.
And so we kind of come back to what the normal expectation is. But you can see on the chart that we're much lower, especially as you kind of project into the future, looking to the next couple of years, where that Fed funds rate. And again, this is the Fed funds rate. This is not what you're going to get as an interest rate from your mortgage lender, but it does correlate pretty heavily to where we're going to see that come down if things happen the way that this chart says it will happen. Is that what I'm reading?
Yeah, I mean, this is what the market is expecting to happen.
Right.
This is the market. All of the participants in the market, they're looking at the data and they're saying this is what we think is actually going to happen. And it is a little bit different when what the Fed is saying. So the Fed has its own view, and then the market's saying, yeah, but we have our view. So those are slightly different. But
Gotcha. Well, I mean, I think the big question here, Hugh, is it safe for me to pull my gold out of my mattress and put it back in the bank?
I would encourage you not to keep money or gold under your mattress.
Oh, man, now you all know where it is. Anyways, I have no gold in my mattress. Please don't come to my house. Well, Hugh, thanks for explaining this to us. I think it's super interesting to see how these occurrences in the market can really shake out over the next couple of years and how that's going to affect how we do business here at Network Funding across the mortgage industry and how realtors are doing business and what the business outlook looks like for our industry. And so this is still something that people are thinking about, but they're thinking about it less. And it's something that is going to not necessarily be a problem in the future, but it did shake things up at the Fed. And it has changed what the future is going to look like for our rates.
You can see that dark blue line is still lower than the red line. The red line being, pre-bank collapse.
Definitely.
So the market is still saying, all things equal, we're going to see lower rates, which means that there's still some extra risks.
Yeah, extra risk, and it also slowed down bank investment, which is going to slow down inflation, which they just accelerated what the Fed was already trying to do. Is that right? Yeah, gotcha. Okay, cool. So that's super interesting. Hugh, thanks for your expertise. Thanks for being on today. Hey, if you guys are out there and wondering how you can get expert advice like this, we want to invite you to be part of the best network in mortgages. If you want to check out the Grow link below, we usually have Rich on. He's our vice president, and he gives coaching to our people every single day. And so check that out if you're interested in what we're all about. Otherwise, we had so much fun hanging out with you today. We hope to see you next time on Today in Mortgages.
Thanks, guys.
Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.